Hi, everyone. Welcome to your latest Carson's Glass Half Full. Ryan and Sonu here as always. Sonu, if you just look at the S&P 500 and the stock market, we're like not that far away from all-time highs. Yet, if someone was top-heavy in a lot of technology, AI, memory, semiconductor stocks, it feels a lot different out there. That's what we're going to talk about this week. The title was Tech Stocks Are Crashing. Now what? How do you want to take this conversation, Sonu?
Look, the S&P 500, as you said, is barely, 2-3% of all-time highs. The last all-time high was on June 2nd. Since then, if you look at it, being off 2-3% is no big deal. Literally not a big deal. That should be par for the course if you're investing, especially over the long term. We've seen these before, especially, numerous times before. The thing is, there's a lot of churn underneath the hood. If you take S&P 500 excluding AI type stocks, those are up 6-8% over this time.
But since June 2nd, to be sure?
Yeah, since June 2nd, since the last all-time high.
Okay.
But if you take tech stocks, you look at the NASDAQ now, it's probably somewhere, off 10% thereabouts from its last all-time high, which means that's the technical definition of maybe a correction. You look at what's happening in South Korea, where the index is mostly made up of memory chip stocks, which are used for data center construction. That's off 40% from June 22nd. I think June 22nd is when the South Korean index, the Kospi index, hit a high. Now, and that's translating to chip stocks here in the U.S. as well.
Well, and not surprisingly, I didn't realize this till I looked into it a little bit. Chip stocks in the U.S. peaked on June 22nd also. Again, probably not a huge shock there. And I know you did this research. June 2nd was the last all-time high. So we haven't had hit a new high for, going on 2 months now. But again, under the surface, financial stocks are up double digits since then. Healthcare stocks up double digits since then. Industrials, which is a big important group, doing pretty darn well also. A lot of groups have seen gains. It, again, is just the large tech stocks. You probably heard of the Mag 7, the semiconductor stocks, the memory stocks. A lot. I mean, let me just say one more thing, Sonu. I'd love your take. We talked about this in a mid-year outlook, right? We did the video a couple weeks ago, and I pointed out that, listen, a lot of these semiconductor stocks are up 200-300%, some of them even up more at the middle of the year. Let's just be honest. They were probably due for a pullback. They were probably due for a snapback. That's a stretched rubber band. I think what's encouraging to me as an investor, and hopefully everyone listening out there, the S&P's hanging tough. I mean, a lot of these big names are down a lot, but other things are taking the baton. I mean, one more comment, Sonu, than you. Earnings season's been spectacular. Maybe talk about earnings season a little bit, actually.
Yeah.
We started it off a couple weeks ago with banks. Banks came out just with incredible numbers, incredible guidance, talking about how strong the economy is, households are, lending is strong, trading volumes, IPOs, M&A, lots of things. My take, call me old-fashioned. If bank stocks, if regional bank stocks, if large bank stocks, if community bank stocks are hitting 52-week highs or all-time highs, like we're seeing literally like right now, that's probably a good thing. Sonu, what else want to add to this conversation?
So trading volumes and M&A, mergers and acquisitions, that's booming. That tells you, the economy is fine. And it also tells you there's a lot of activity in the stock market.
Yes.
IPOs, right? There are some huge IPOs. I mean, not a recommendation. We saw SpaceX, OpenAI, Anthropics also coming again. But then you're back to the whole AI wave, right? Now, if you think about the tech stock area, think of it as 3 big buckets. And it's like I know there's the famous meme where the Grim Reaper comes for each and every door.
Yeah.
And the Grim Reaper within tech first came for software, then it came for the hyperscalers, who are the big, large companies like your Microsoft, Oracles, Googles of the world, Meta, funding these data center construction. And then now there's the chip stocks. Now, one company's spending is another company's revenue and source of profits. Who's spending? It's a hyperscaler. So the 2 big questions: can that spending continue? And is it worth it? Right? And I think that's what the market is trying to figure out. Is this worth it? And are they going to continue spending? We think they will continue spending. Google at the start of the year, or Alphabet, same thing, said they're going to spend about $115 billion just in 2026 for data center construction. After first quarter earnings, they told us they're going to spend $185 billion in data center construction. Now, after the second quarter earnings, which was last week for Alphabet, they said, we're going to boost that to somewhere between $195 to $205 billion. Next year, analysts are estimating about $260 billion in data center construction. So totally, we're looking at somewhere between $400 to $500 billion by one company, data center construction. There's a reason why electricians' jobs, carpenter jobs are going through the roof, job openings and things like that. We can't find enough of that because they're all working on this stuff. But that's equivalent to 1.5% of GDP from one company's spending. And there are a few more doing this, right? So I think this continues for a while, Ryan. I mean, but the questions will be asked.
Mm-hmm. You know, the time we're doing this, we've heard from, again, Alphabet. Some other big names are coming out, hyperscalers. We'll see what those numbers are, but good chance they're going to continue to spend. You know, just maybe I'll wrap it up with a little bit about earnings season, okay? Because a lot of these companies are making a lot of money. Absolutely. But it's not just the large hyperscalers that are making a lot of money. You know, again, no recommendations at all, but heard of Coca-Cola? I mean, Coca-Cola, they came out with spectacular earnings, spectacular growth. Heard of 3M? Again, not a recommendation, a large industrial company. They had spectacular earnings, spectacular growth. Those banks did. A lot of big companies that aren't, I mean, yes, everything is connected to AI anymore. Let's just be clear. But it's not like you go buy Diet Coke, you're thinking about AI, right? I mean, there are some real positive things that are happening out there on the earnings front. This time a couple weeks ago, earnings in the second quarter expect to be up 23 or 24% year over year. As the second we're doing this, Sonu, it's in the upper 30s. And who knows, by next week, it might be in the low 40% year over year second quarter growth, which would be the best quarterly earnings growth in more than 5 years. Earnings are strong. Profit margins are strong. Spending is strong. You've talked before about consumption from households the last 2 months has been an annualized, about 7 or 8%.
Yeah, 8%. I mean, yeah.
Listen, there are cracks out there. Things aren't perfect. Yields, trust me, yields going higher. It's hurting the mortgage. It's hurting mortgages. It's hurting housing market. Things aren't perfect. But overall, we'd say this economy is still solid. It's being led by strong earnings. And as investors, that's what we're talking about here in these glass half fulls. What's going to happen with your money as you invest your money? We still think this is a bull market. So let's wrap this thing up.
Look, what you just mentioned can be summed up in 2 words: inflationary growth.
There you go.
But one person's inflation is another company's margin expansion. And that's why the stock market's also booming. I think I'll just leave it at that.
I think we'll leave it at that as well. Everyone, this again was your latest glass half full. Tech stocks are crashing. Now what? Listen, we think stay diversified, stay investing in this bull market. Tech stocks might come back, but there's a lot of other parts of the market that look pretty darn good as well. With all that, we'll see everybody next week. Take care. Thank you.